Hi, everyone, and welcome to this week's installment of StockCharts TV Mish's Market Minute. I am your host, Michelle Schneider, aka Mish. And we have a pretty exciting day on hand, as it turns out, because after all of the negative news that hit the market with the final blow of the Russia-Ukraine situation, we may be seeing an incredible reversal off of the lows. So my topic for today is, how do we know what are the signs of a bottom? And we're going to take a look at how we can ascertain that, and we'll have a deep dive into the macro and some areas that we've been watching for that we've talked about on this show. So let's get started.
Let's go through just some of the general ideas of how we look for a bottom. And you're going to see it's all technical. None of this has to do with, oh, well, the war is ended, or inflation is over, or the Fed is raising, or the Fed is easing. The charts do tell us everything we need to know. And in fact, I saw something that somebody posted on Twitter recently that is a good technician knows more than any macro person. And hopefully, I'd like to think that after all this time, you guys agree and see that perhaps these charts will fit that bill, because the markets are forward thinking. So one of the things we look for is a new 60+ day low and then a reversal on huge volume that confirms. So far, as the day unfolds here that I'm speaking to you, we definitely saw a bunch of new 60+ day lows, a huge reversal. The volume, I think, has also been very good. We'll see by the end of the day. And yet it has to confirm, which means that we would have to see either some level of consolidation or follow through the next day. The next way we look for a bottom is the mean reversion. And you've heard me talk a lot about that. And that's when basically you get to a very low point. You could say oversold conditions, which is something we saw. We break down in momentum and come back through the Bollinger Band in our real motion indicators. I'm going to show you. We break down in the Bollinger Band on price, and then we come back through. That could also be not necessarily a bottom, but at least a good support for why we might see a bounce. We also like to look at the bond market. As you know, I'm a big fan of the high yield, high debt bonds. We're going to take a look at that. And of course, island bottoms and exhaustion gaps that confirm, again, you always need to have price follow through at least a day or two after those happen. And maybe we'll discover some of those in our research today. So let's begin and go to the charts. But first, I'll just show you quickly what the symbols are we're going to cover, some of which are things we've covered in the past, but all today with the eye of either has it bottomed, or in the case of commodities, has it topped? Okay, let's get going. All right, so I always like to begin with the Russell 2000, because it was the Russell 2000 back in November that peaked out, had a breakdown the next day, and even with a little bit of rallies here and there, never got back through that 50-day moving average. And so here we are. In fact, we had that death cross, so we're in the bear phase. So that's an important indicator to look at, because what really happened today as I'm talking to you is a couple of interesting things. Number one is, I think I had mentioned that it was already showing leadership over the SPY, and you can see that here on my leadership indicator that it's actually doing pretty darn good compared to the SPY. But we also looking at the real motion indicator. Of course, we've broken down and never got through the 50. So we still have a ways to go, but at least the momentum sort of bottomed out before today's move down, and the momentum has improved. In terms of the price, here's that sort of mean reversion price, in that we've broken down under this green line, which is the Bollinger Band, and now we're back through it. But to me, this is the more important thing. With the January low that we had here, we actually broke that low for like a second. And that low is at 188.09. I think today's low in IWM was 197.92, and 187.92, and we immediately got back through it. Plus, if we go to a weekly chart, this is what I really like, is if we go to a weekly chart, and I have to scrunch it up here, we go to a weekly chart going back to January of 2021. Look at what that low was, 189.15. So we could say that we actually have the potential for a triple bottom. Now, again, I don't want to get too nuts about that because we need confirmation, but this type of rally that we're seeing off the lows today is great. So now, why would we possibly be bottoming out? Well, there are three reasons for that. Number one is that it could just be oversold and we get a good vicious bounce. As we know, big rallies happen in bear markets. Number two, it could be that the fact that we have still COVID in the rearview mirror and lots of optimism about the economy coming back as a result. Even jobless claims were at a low today when they came out. And number three is that we have a new scapegoat for inflation in town, and that's Russia. So it also could be that the hawkishness of the Fed, the market is anticipating, will not be quite as hawkish because of the geopolitical situation. They may say, well, we still have to raise, but now we really believe that the end tail of whatever we saw in inflation truly is transitory because this issue with Russia will resolve. And therefore we'll raise, but not by that much. I think that's probably the biggest reason. But nonetheless, the question is what happens the next day? Ideally, we would see some kind of an inside day, head into the weekend, and then get follow through on Monday if nothing too horrible happens over the weekend. But we could also see another move higher tomorrow, in which case then you have to start looking for the resistance, and that's where we're going to be looking at 200 as a resistance level for the IWM. Now, the Qs are also interesting. And by the way, when we're talking about the range-bound situation of a stagflation environment, IWM just proved that that could be the case, whereas Qs we thought would go lower than where they are now, but they still have managed to correct about 20 to 25% until now they've bounced back. Here, we didn't get a mean reversion, obviously, because you can see we never broke down under the Bollinger Band in real motion. But we are seeing an improved momentum. We did, however, in price. But again, now, if we scale back a little bit in time, is there anything down here that's interesting to us? And I would say that really, if we go back to last year, even though we are below where we started last year, we definitely had that correction here that happened in the May of last year, May, June, and we held those lows. Those lows really came in at around 215, and today's low was at around 318. So again, I would be less optimistic about this bottoming out because of the fact that we still think that there's going to be troubles when it comes to either any interest rates when it comes to the tech stocks. But nonetheless, this is very impressive. And again, if it does turn out to be the case, 315 would be your max risk, and we have to see a little bit of work and a confirmation. As far as the SPY goes, that also had a very interesting scenario because we had this low here in January, on January 24th at 420.76. We broke it today. So here's the classic new, as we just saw with NASDAQ, new 60-day low reversal. But again, not so much with the IWM, because IWM doesn't necessarily need to confirm because it's already showed it's got a lot of muscle there at around that 190 level. But this in particular would have to have some follow through. Now, we do have a mean reversion here because it broke down under the Bollinger Band, but it needs to come back through a little bit stronger in momentum, and also it broke down in the price, needs to come back a little bit stronger. So I would say, depending on where this closes the day I'm talking to you, if we get a move, let's say over 426 the next day, then I would say that perhaps even with the SPY, the worst is over. But we do have headwinds, so it's not like I'm getting crazy bullish. I'm just saying that it's really interesting that once you stop paying attention to the narrative, then you can have a whole other way to trade. Now, with the diamonds, this could be that exhaustion gap we're talking about, right? As one of the things. It's not an island bottom, because an island bottom means that it has to be a new low. And in this case, it's not a new low, but it's definitely a new 60-plus day low that gapped down and now is reversing. Now, we have not gotten back to the lows here to clear, and that would be basically a move back over 330.85. Let's call it 331. That would then fill this gap. It would be probably best if we have this gap left here, and then the next day we gap up a little bit, leaving an exhaustion gap. And again, that could be a sign that the Dow was ready to go up. Now, when we say go up, just want to quantify. I don't mean new all-time highs here. I'm talking about in the range-bound theory, we can go back to maybe the middle of the range, maybe even if things got really great, like the Russia thing resolved, closer to the highs, but I don't think we're going to new all-time highs or anything. So I just want to make that very, very clear. Now, if we move on to the sectors, let's talk about XRT, because this has definitely been one of the weaker sectors. And again, now I'm going to make this a little bit wider, but if we go back to the January, we're still well under the January 2021 lows. So we kind of have to look more what happened here on this last dip. And that 70 level turned out to be super important. And then it went up and made its new high, and then has been consolidating pretty much for that whole year till it finally broke down. So we need the retail sector to participate. Here's your mean reversion trade. Breaks Bollinger Band, comes back through, makes a new 60+ day low, comes back through the Bollinger Band. But I'd still want to see a little bit more evidence here, and that would mean that this really needs to get through 76. Then I think if you wanted to risk to under 70 to see if you can get a bounce, maybe back up to around that 84, 85 level, that would be one thing. But from a fundamental standpoint, it would also mean that the worst may be, at least for the consumers, behind us. Now, of course, IYT is equally important. And with the IYT chart, we also had similar to what happened with the IWM, and they often go in tandem, is that we had the September low here, which was at 243. We had the January low here, which was at 245. And then we had the February low, we can call it right now, which is at 243. So we're seeing the spectacular level of support in the transportation, which again is so important to the picture. So we also had a new 60+ day low. And we're potentially seeing the reversal on that. But once again, I'd want to see at least another day before I got terribly excited about the fact that that's it. We've made our low. The worst is over. Time to jump back into stocks. Hopefully by the end of this video, you'll have enough information that you can go into it as we end the week. Now here's KRE. Now KRE Regional Banks was doing really much better than most of the other sectors until yesterday, and now with the gap lower today, but it did hold the 200-day moving average. So what's interesting is this is what really gives me the clue that the banks, which like the higher yields, even though the long bonds are down, and we're going to take a look at it, are possibly sniffing exactly what I said, which is the Fed could be less aggressive in terms of hiking now that they have this new scapegoat. And if that's the case, you're going to see money rotate back out of the banks and back into some of maybe more of the cyclical stocks. We will see about that. We still have an inflation narrative, by the way. It's not like inflation's gone away, and we'll talk about that. Now here we have semiconductors. Now, of course, semiconductors also held really big support here around this 245. If you go back here into October, and then the January low, which again we took out and totally reversed. So again, a new 60+ day low today. Once again, though, we need some follow through. I would say probably we could see a rally up to 270 before that might stop this rally, and then it turns back down. But nonetheless, I'd like to take a look at the weekly one on this one, because I think it's also important to get perspective. This broke down under that 50-week moving average, but it's possible that if we get a close back above it, then it didn't really confirm, and that could be another place to be looking for some opportunities for buying some stocks. Now, let's go back to the daily here, go on to the next sector, which of course is IBB. Now, IBB has also been classically weak, and let's just scrunch that up a little bit to see what we see in the past. And we don't see much here. This really broke down under everything. So the question is, this need now to have its own merit for coming back. It's different than medical devices, but nonetheless, we are seeing a new 60+ day low with a follow through. Again, if we see some kind of confirmation and a move, let's say back over 124, 125, then you could probably have a look at using today's low as some kind of risk. That would be under 118 to see. Now this one might have the potential to get up to 138, which is where the 50-day moving average is, and that would actually be a pretty good move risk reward. Now let's go to some of these outliers. So let's go to TLTs. So TLTs, of course, have been down. And they started out up with the market down as some kind of quasi flight to safety, but they've come off a lot. And the thing that I can tell you about the TLTs, though, is that we are still above that 80-month moving average that comes in at 134.77. As far as I'm concerned, until we break down on a monthly basis underneath that low, we're still looking at this as a lot of potential noise as the market is trying to figure out what the Fed's going to do. So I'd like to really look at the high yield debt and the junk bonds, whether you want to look at JNK or HYG, it doesn't really matter. But what was so interesting to me was, again, this was giving us signs of caution long before the market sold off. And once again, could be giving us signs of a relief, just like IWM, with the fact that it came in, tested the low of September 2020, which is at 102.66, with today's low of 101.99, and then immediately shot back through. And now we haven't quite had the mean reversion trade here in momentum, but we're certainly trying for it in price. Are we out of the woods? Again, we need a little bit more time to discern that, but we are getting close to a 10-day moving average, which I don't have here, but the 10-day moving average, we have not been above that for the entire year of 2022 so far. So that means if we can get through this 10-day moving average and hold, or at around this 103.30, 103.20 level, that could mean, again, not only are we going to see maybe some money coming into the high yield bonds, but that would certainly mean a little bit less of the risk off and more in the risk on. Okay, so let's quickly go through some other things. Let's take a look at some of the commodities. All of a sudden, everybody's saying inflation's over. Well, I don't think so. But let's look at the oil price. They may have gotten up to 100, and that could have been it. And so we had a 200-day moving average here. That's a 200-week moving average. Let's go to the daily. We've had the 200, in the weekly chart, we tested the 200-week and we've come off. Here, we might have seen just the opposite of what we're seeing with the equities, which is some major type of reversal. Now, we haven't exactly seen a mean reversion trade in momentum, but nonetheless, we've come off hard, but we're holding around 65. I would say I wouldn't necessarily dismiss this as over, but maybe it's had its run for now and we can see some kind of correction. That would certainly be great on many levels. It would also help the equities market, by the way. But let's watch the 65 level and see what happens. And then if it holds 65 and starts to creep back up, then maybe not so much. But if it breaks down under 65, it's possible that we can see this move down to about 59 again. Now, the other big interesting thing was gold. There's been, again, so much, and this is why the talking heads make me nuts. There's been so much talk about gold versus Bitcoin, gold versus, well, meanwhile, now gold's down, Bitcoin's up. I mean, yes, there's a correlation between one is more risk on versus gold, which is more of a safety, but they can both have different functions, and that's what we're seeing with gold. So gold obviously popped up real high this morning, and we took profits up here. I even tweeted as such, so we're just holding a small tail, obviously long from lower levels. But we again want to see this hold up at around 175 for it to be good. Let's call it around 1890 to 1900 in cash gold. And then we could see what happens. Was this a big reversal bar? Well, we certainly haven't seen the momentum go into a mean reversion, just price. So we'll wait and see. I still think gold is still relatively undervalued, but nonetheless, everything could change on a dime. And here's the dollar, which of course we got the big flight to safety in there this morning, and now this is coming off as well. I still think the dollar has some negative implications. Look at that. The momentum just went over the 50, even though the price is way up here. So you got to keep your eye on this as well to see what's going to happen. And silver, which last week we were talking about was a great buy, and certainly it was. And my God, you certainly got some targets here. Now is back under this 200-day moving average. And again, $24 an ounce in silver and cash is going to be important. That's the area I would watch for here. And I would say this 22.50 is now going to be somewhat pivotal as the 200-day moving average. But one thing that's still up and still up big is wheat. And with the wheat chart, we just had this big gap up. So I would say food-driven inflation. How many people have heard me say that over and over and over again? You can look at the gold and you can look at the silver and you can even look at the oil, but they're not going to really tell you where this inflation is being driven from. It's really food. And Russia, of course, put a kibosh on this because it is a big exporter of wheat. But other countries that grow wheat are having their own problems, and Mother Nature is certainly wreaking havoc. So to me, whereas we just looked at the potential for equities bottoming, the one thing that makes me a little bit cautious here is the fact that we can still see higher prices in these food commodities, which of course will drive inflation higher all around. So keep your eye on this one as well. Now let's go into a few others that might be signaling that all is maybe possibly better. Now, you know, I really liked solar energy. I've been showing you TAN and PBW. So right now, this is another one of those charts that made a new low by just a smidge and then reversed. Okay, now we're into a little bit of resistance here, but I like PBW on the potential of a double bottom. And if that's the case, what I'd really like to see is maybe a little bit of digestion of today's big move. We have a big bullish engulfing pattern, by the way, over yesterday's price action. And if this thing can continue and hold this levels of about 53.5 and then get back up again once over 55 or 56, then maybe the solar energy market has truly bottomed. There's certainly a lot of solar stocks that have done well again. And again, also with IHI, which I did a whole video on, same thing, only took out the bottom by a smidge, came right back through. And now also splendid reversal. In fact, it cleared all of this week's work that we've had so far on this short week. But now, you know, it's going to be interesting to see how it goes as we have some resistance here up at around 58, 58.25. That's what I'm looking for before I jump in, or at least some consolidation. And then a couple of other things I want to show you. One is ARKK, because she got a lot of bad press. And so right now, again, new low, I was looking for 56, but it went to 57.51. Now this too has turned around, still needs a lot of work here. But if this thing can come through, and by the way, there's a spectacular trend line. If you connect the highs here all the way to here, it's going to come down somewhere around 70. If this can get through 70 and break that trend line, then perhaps the worst is over for Cathie Wood and her disruptive technology. She got out of Palantir, by the way, which is up 13% as I'm talking to you. And just for a sort of back to work type trade or back to normal type trade, I like to look today at Uber, because Uber did the same thing. It had this spectacular reversal, and now really needs to clear back over 35, not too far away, in which case all the things we're looking at, the airlines, the restaurants, all the stuff we've talked about, not to mention just not only the medical supplies, but even, you know, some of the hotels, all of these things could be setting up for this spectacular bottom. But again, keep your eye on the IWM, which right now is doing unbelievable since I've been talking to you, and also the high yield debt, which is breaking the 10-day as I'm talking to you. And then again, ignore the talking heads and just go for it.
So thanks so much for watching. I hope this information was valuable. And the bigger lesson here is, instead of listening to the talking heads and all the influencers and all the noise, the best place to always go for your information is the charts. Have a great weekend. Thanks so much.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.